Up next is business news. Please stay tuned.
It's now time for business news. Coming up shortly, Dr. Mensah projects Bank of Ghana may cut policy rate to between 17 and 20%. Also, the Ghana Statistical Service urges households, businesses to leverage single-digit inflation for growth. And then Nigerian's finance minister urges collective effort to build stronger economy. These and many more stories will be coming your way shortly. Do stay with us. I am Praisebell Rosemont Labi. And on to the detail of the story. Starting off, senior economist at the Center for Impact Africa, Dr. Samuel Wolanyo Mensah, has predicted the Bank of Ghana's Monetary Policy Committee could lower the policy rate to between 17 and 20% at its upcoming and final meeting for the year. Speaking to Z News, Dr. Mensah explained that the move could reflect Ghana's improving economic conditions, including easing inflation, a strong cedi, and growing investor confidence. He noted that inflation has dropped to 8%, the lowest in 4 years, creating room for a rate cut from the current 21.5%. Dr. Mensah said a reduction would help lower borrowing costs, boost private sector investment, and sustain the ongoing economic recovery. The MPC is expected to hold its 127th meeting from November 24 to 26, 2025 to review key economic indicators and announce its decision.
Well, by and large, government's quest to improve upon the welfare of citizens has been a mandatory concern to the state. And for that matter, the central bank is doing everything possible to at least push the policy rate downwards. And so that has been one of the major concerns. Now, the Bank of Ghana is putting a lot of measures in place to ensure that interest charge on loans and other facilities are reduced drastically by the various commercial banks. And so commercial banks can only do that when there's a reduction in the policy rate. And so that has been steps in the right direction. And government is also trying its own best to ensure that there is fiscal discipline, and they will try as much as possible in holding the inflation at single digits. And once the inflation is held at single digits, definitely the adverse effect is that the interest and the welfare of citizens will be improved marginally. And so that has been a strategic agenda for the central bank all this while. But there will be a reduction, but as to the specific percentage, that will be a contention. But then definitely 19-20% is likely to see some level of appreciable reduction. And even if government thinks that, even though the policy rate is also revenue to the state, but I believe the central bank is much more concerned about how best we can improve upon the economies of scale using the market value. And so definitely when the issues of market value set in, much more reductions in the policy rate is likely to be seen. So we should be expecting something between 17 to 20%. And so that will be between 100 to 400 percentage.
That was senior economist at the Center for Impact Africa, Dr. Samuel Wolanyo Mensah. Moving on, the Ghana Statistical Service is urging households and businesses to take advantage of the country's lowest inflation rate in 4 years to strengthen their finances and invest in growth. Headline inflation dropped to 8% in October, marking the 10th consecutive monthly decline. Government statistician Dr. Alhassan Idrissa says the return to single-digit inflation should be a turning point for better budgeting, savings, and long-term planning. He explained that food inflation fell to 9.5%, while non-food inflation dropped to 6.9%, showing improved supply conditions and easing price pressures. Dr. Idrisu encouraged businesses to reinvest savings from lower input costs into technology, skills, and local sourcing to boost competitiveness. He also called on government to maintain sound economic policies to maintain the disinflation trend and promote lasting stability. Away from that, the Ghana Stock Exchange saw a mild slowdown on Tuesday, November 4, 2025, as profit-taking pulled the GSE Composite Index down by 85.81 points to close to 8,284. and then the market's strong starts to the week on a softer note. Despite the dip, financial stocks held firm, with the GSE Financial Stocks Index rising by 34.01 points to 4,265.86, supported by gains from Benzo Oil Palm Plantation, GCB Bank and Societe Generale Ghana. Benzo Oil Palm Plantation led trading, climbing 2.55 Ghana cedis to close at 41.55 Ghana cedis, while GCB Bank and Societe Generale Ghana also advanced. However, MTN Ghana slipped by 0.11 Ghana cedis to 4.05 Ghana cedis, and Cowbank edged down slightly. Trading volumes increased to 506,000 shares, though the total value of trades dipped to 934,012 Ghana cedis. Analysts say the slight decline reflects a healthy correction after weeks of strong gains, with investor confidence in Ghana's equity market remaining firm. Moving on, Ghana's banking sector has made a remarkable recovery from the shocks of 2022 domestic debt restructuring, re-establishing itself as one of the most capitalized and resilient in West Africa. According to the UBA Africa White Paper October 2025, titled Banking on Africa's Future, Unlocking Capital and Partnership for Sustainable Growth, the industry has turned the corner after 2 turbulent years marked by heavy bond losses, liquidity challenges, and a sharp erosion of capital buffers. The report reveals that Ghana's banks have achieved robust recapitalization, improved profitability, and a significant reduction in non-performing loans, which has dropped below 15% for the first time since the financial crisis. This recovery follows aggressive restructuring and decisive regulatory interventions introduced by the Bank of Ghana in the wake of the government's domestic debt exchange program. The initiative, launched in December 2022, saw about 82 billion Ghana cedi worth of government domestic bonds exchanged for new instruments with longer maturities and lower interest rates, a move that initially wiped billions off banks' balance sheet. In response, the central bank implemented a comprehensive financial stability plan, including the creation of the Financial Stability Support Fund, designed to strengthen capital adequacy and restore depositor confidence. The UBA report notes that Tier 1 banks have rebuilt their capital positions above the regulatory minimum, while smaller institutions have either merged or attracted new strategic investors to reinforce their operations. And on to our last story on international business. Nigeria's finance minister and coordinating minister of the economy, Wale Edun, says the country must stay committed to its economic reforms to drive the next phase of growth and lift millions out of poverty. Speaking at the Finance Ministry's engagement at the 2025 Macroeconomic Summit in Abuja, Mr. Edun stressed the need for stronger policy alignment to support key productive sectors of the economy. He noted that Nigeria is at a crucial turning point and called for collective effort to sustain the current momentum and secure long-term economic progress.
Our reform journey is to break the cycle of macroeconomic instability that has historically, as we all know, undermined growth. The vulnerability, the challenges of the past, vulnerability to external shocks, especially, of course, the oil price fluctuations, fiscal and external imbalances, high food and energy costs, high cost of living, high inflation, and a weak investment environment and a shortage of globally competitive labor. In response to that, there has been, as we all know and we heard earlier and we've heard throughout the day, market correction. The key prices, the price of market pricing of petroleum products, market pricing of foreign exchange as the key prices in it. And then following on from that, macroeconomic stability, anchoring inflation. We heard this morning that the number one target of macroeconomic policy must be to fight inflation, because once you have inflation not under control, the poorest and the most vulnerable suffer the most, and even others that are able to perhaps resist and pass on some of these costs, they too do not have an environment in which they can plan for investment.
And that was Nigeria's Finance Minister and Coordinating Minister of the Economy, Wale Edun, ending business news. And this is where we draw the curtains on business news. But before I go, let's take a recap of our headlines. Dr. Mensah has projected the Bank of Ghana may cut policy rate to between 17 and 20%. Also, the Ghana Statistical Service has urged households, businesses to leverage single-digit inflation for growth. And on international business, Nigeria's finance minister has urged collective effort to build stronger economy. These and many more stories was brought to you from our studios here at number 6 Anite Avenue, East Legon, Accra. For more news, you can log on to www.zmultimedia.com, or you can follow us on Instagram, Facebook and X at ZFMGH, and on TikTok and YouTube at Z Multimedia. I am Praise Bell Rismont Labi.